Again, I implore you to remember, f your puts, f your calls. Jay Powell has you by the balls. God bless my money printer.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. The demonic duo both gave their speeches today, and by that I mean Fed Chair Jay Powell as well as Christine Lagarde of the ECB, and both of them have been extremely dovish in their commentary, hence the markets took off, retesting or making new all-time highs. We have the S&P with a new all-time high. The NASDAQ at the time of recording has not yet made a new all-time high, but it's close. The Russell tested a breakout area of 2100, hasn't broken through yet. The Dow did not push through yet. Bitcoin is still consolidating. We're going to cover all the charts, cover these markets. I added gold and silver as well for commodities. I'll add some other commodities and international markets on the next transmission. But guys, I want to cover a couple of things Fed Chair Powell said. Powell yesterday talking before Congress, today before Senate, kept repeating how strong the U.S. economy is, and there's no signs of recession. And he said we will be cutting rates, his words, substantially at some point this year. The market absolutely loved that. My question would be, which of course nobody asked him, if the economy is so strong, why are we cutting rates substantially? If unemployment shows no signs or no risks of recession, if the leading economic indicators don't matter, if the yield curve doesn't matter anymore, if we're canceling the business cycle, then why the need? Why the urgency to reemphasize that some point this year we will cut rates substantially? I thought Powell really missed a boat on this. He had the opportunity to cool off the markets, and instead what he's ended up doing now, very similar to my rant I covered last Thursday, guys, is he did not want to make the same mistakes as Arthur Burns in the 1970s with the Fed. Because Burns had inflation, he raised rates, he brought rates down when inflation came down, then inflation went back up. Remember, this last CPI print showed a heating up of inflation. This next CPI print, which I believe will be a bearish catalyst if it comes in hot, the Fed expects it to come in hot once again. So that's back-to-back months of hotter inflation. And Powell is fanning the flames by broadcasting that they will be cutting rates. But I think he's doing that because he has to know. I mean, he cannot be that stupid that the economy is teetering. ISM manufacturing is at pandemic lows. The yield curve inversion of the 3-month 10-year, which has never had a false signal, has been in recession territory now for 14 or 15 months, 2 months past the norm before the recession hits. Okay. And then we have the leading economic indicators. Once again, guys, printed 23 consecutive months of recessionary warning, telling you you will get a recession. Doesn't tell you when, but it tells you you will get a recession. The GFC is the Mac Daddy with 26 prints in a row, negative prints in a row, and we're 3 months away from taking that title. So I think those recessionary signals are there, but Powell does not want to say that. And then what ends up happening is we inflate these massive bubbles, and the people that you think you're trying to protect and help, which the Fed Chair Powell says is the lower and middle class people, that's who he's trying to protect and help, because the Democrats are pushing back on him saying, you got to cut interest rates, people can't afford housing, as if housing prices, because this is what they were saying to him, housing prices are going up, so we know it's driving inflation. You have that backwards. Inflation is driving the housing prices up, but Powell doesn't even bother to correct them. So it's absolutely mental. I could only watch a little bit of it yesterday, a little bit of it today. The lack of economic understanding with our politicians and with the guy that is in charge of the Fed is absolutely amazing. But that is where we are right now. So we want to look at these key resistance areas. The markets are euphoric, inflating the bubble even higher. The movements have not changed. We're in this elongated wave, a 25% gain now. Remember, this is the strongest and fastest move going back to 1971 in the S&P. And what happened in 1972? The largest stock market crash since 1929, with the S&P falling 66%. So we're going to look at this in the charts. Lee, without further ado, let's start the show. right, guys, this transmission, as always, is brought to you by our two fantastic sponsors, SimpleFX. Our tournament is live. It is active. You can click the leaderboard to see the amount of money you are winning. If you are trading, you are automatically entered in that tournament. If you would like to create a new account, it's right there available on the link. If you're in one of the few and rare countries where you cannot trade on SimpleFX, check out our other sponsor, BingX. You can trade all the cryptos, commodities, and equities there as well. Those links are in the video description. Both of them will pay for your first month on our Market Makers Discord. Message Lee with any questions about how to join. Those will be pinned in the YouTube comments as well as the video description. Let's start off with the fractal pattern. This is the same as it always is, guys. We are still in this elongated wave. Previous waves were 20% up moves, 10% corrections. We are now in a 25% up move, which to me just tells me we are overdue for the correction. I think most people you watch on TV even telling you the same thing. Tom Lee's telling you the same thing. Larry Williams is telling you the same thing. Markets can move. It's euphoria, divergence across the board. But let me show you what I think's happening here. I want to start off with the Dow, which we never do. Starting off with the Dow. So this is a 5-day chart, guys. And if you look back here, look at your previous all-time high. There's your market low. There's your fib. The Dow is not threatening to make a new all-time high. I think there's a reason for that from a Fibonacci perspective. Notice we hit the 1272, 39,062. We got wicks above it, came back below it. We're at 38,878 right now, but no upward momentum. The Dow's up spot 44% right now. So only 172 points on the Dow, and we hit the 1272. Let me show you what this looks like on the other indices here. Now, on the S&P Mini, remember the Dow is a proxy for the S&P. It has all the same sectors represented as the S&P, fewer amount of companies. Now, on the S&P, we're at the 1272 right now, 5163. Price is 5168. This is that upside target I was showing you guys previously. I'm looking for price to start petering out in this range. My last idea for my trade, we got 100 points off that trade. And I told you if Powell is dovish, I didn't know what he was going to say. Markets would rebound, retest the highs. You not only retested the highs, you have now taken out the highs, but you're in this key area of resistance. You can get wicks above it. Let's see if this range 5163, which is your previous all-time high, down to your market low, the same level the Dow pumped to and kind of just stalled out at. Let's see if this provides resistance here, because if it does, let's just look at this from a 5-wave esoteric wave theory perspective. This is not Elliott wave. I don't care about the Elliott wave rules. I want to show you guys what I think is happening here. So here is the third wave. Okay, this is our third wave. Remember, 5 completes a harmonic cycle. When you're looking at the third wave, if we find a top in this range, we talked about the downside targets, whether it's 4,800 or coming down to that 4,600 level as well, that July high previously. Let's just throw this here. Where would this be going? We can get a fib projection after we make this level here around 4,600, but just based off of this larger fib projection, you'd be looking at 56.15 if you were able to hit the 1618 in this marketplace with the yield curve this inverted, showing no signs of uninversion. With the euphoria this strong in the market, I know a lot of people on YouTube are talking about this being the big crash when this reverses. I do not think that's the case. I think it's too early. I'm still expecting our top and drop. How we handle this range down here, which I think we'll be basing and pushing back up, will tell us if we're going to get that next level blow off top in the marketplace. 56.15. Now let's just take a Fibonacci projection here off this retracement. Again, we don't know if this is the exact top, and we don't know if we're going to 4,800 or 4,600. 4,600 puts us back in that range of the previous corrections of being 8 to 10%. That's why we're going to use the 4,600. Notice my 1618, 55.30, the other 1618, 56.15. Again, you're looking at this, whatever that is, 55.50 to 5,600. If we pull down to the 4,600 and launch back up, the deeper the retracement, the larger the proportional move could be back to the upside, but we still have to get the top. We still have to get the drop. And I think that catalyst will be Tuesday with the CPI. If the CPI is hot. If the CPI is cool, guys, you could continue in this extended up wave in the marketplace. Let's go ahead and remove this and let's look at this. This is your 5-day chart. Let's go ahead and go down to a daily chart and see what we have. Using that same Fibonacci resistance level, you can see what we're doing right here. This is what we're talking about. We're getting just above 51.63 at this point. If we look at this, I mean, you can pull different fib targets on this, right above the 1618 at 51.62. So I want to see if we get some resistance up in this area. This is Thursday. Tomorrow will be Friday. Euphoric pump up. Let's look at our indicators on the daily, pin over this ad nauseum. But of course, bearish divergence across the board, right? So this was your peak here. This was peak in participation in market breadth. This is back in December. Remember our Santa Claus rally? This is peak in participation. You had your market breadth. Let's get the exact number here on the S&P. Your market breadth over here was 91%. 91%. Right now, you're at 71%. You've dropped down 20%, meaning 20% drop off as price has continued to climb. Again, it doesn't matter in the sense that the market, these markets are market cap weighted. Okay. So you can have fewer companies, the big mega caps pumping, they've been carrying the indices. You can have fewer companies with euphoric moves driving it up. You look at the money flow, less money coming into the marketplace, divergence. When? Since the Santa Claus rally. All of this is bearish divergence as well as momentum. But the key thing is, like I tell you every video, it doesn't matter until it matters. You can see the divergence here if I draw like this across as well. So that's what you're dealing with. I think with the Dow coming up to the 1272 and stalling out, getting wicks above, I'm expecting the S&P to do the same in this exact same setup. Looking at the NASDAQ, NDX, guys, here's our 5-day chart. Exact same thing I just showed you on the S&P. There's your previous all-time high. There's your market low. There's your 1272, 18,476. You can see we are at 18,342 right now, about 120 points away from hitting our 1272. Does it have to get there? No. Does it have to find resistance there? Could it not just keep going? Of course it could. What we're doing on this channel is looking at TA and looking at potential trade setups that we can get in this marketplace in confluence with your own market view. Your market view may be different than my market view, but this is what I'm doing. The wave pattern will be the exact same here, as you can see. We have our 1, 2, this is 3. If we find the stall out here and then pull back down, again, my 2 targets for the NASDAQ retracement, basically right in there around 17K, or coming down to complete our normal size retracement right around 16K. Right around 16K, your July highs. Let's just keep it consistent. And if we are using this fib projection from the previous all-time high, that's your 5-wave move up to 20,650. If we get that move down, if we top out here at the 18.5 and we get that move down to 16, again, there's your 1618 at 20,100. Here's your 1618 at 20,650. 500 points difference. I understand that seems like a lot. That's basically a day and a half on the NASDAQ, given its average moves, okay? So that's where you'd be looking at, above 20,000. If we get a top out and a drop from this level, which I think we have a good shot at, depends what happens with the CPI. Again, I don't know what the CPI is going to be. I didn't know what Powell is going to say. Powell's dovish, bullish catalyst. CPI is supposed to be hot, bearish catalyst. We'll see if we start topping in this range. Let's go ahead and go down to the daily chart. Daily chart, we have the money flow again. Everything's bearish, guys. I mean, bearish divergence across the board. Ever since the Santa Claus rally, the whole leg up, you've had money flow dropping, bearish divergence, momentum dropping, bearish divergence, big drop in participation and breadth in the rally. When you look at the NASDAQ, during the Santa Claus rally, you had 93% participation. Right now in the NASDAQ, you are down to 53% participation. Basically, half the companies are not above their 50 moving average on this whole leg up here. Okay. This whole leg up here, half the companies are not even above their 50, but it doesn't matter when NVIDIA is ripping, when Microsoft's moving up, when Amazon's moving up, when Meta's moving up. These are market cap weighted indices, but they will find resistance. And if this plays out like the Dow, then you're going to be looking for that between where you are now at 18,330 all the way up to 18.5. That could be your key level of resistance to watch, because we have non-farm payrolls tomorrow as well. That could be bullish or bearish catalyst. Don't know what the number is going to be. They're projecting about 200,000 on Bloomberg. We had a big blowout last month, and that was considered bearish because if it's too strong, this is the reverse psychology. If it's too strong, the Fed won't cut. If it's too weak, that means we're getting a recession. So there's like this imaginary sweet spot. But when you have the Ponzi salesman on TV, they'll spin the narrative however you want. Hey, that was really strong. That means the economy's strong. That means that could be good for earnings. People are like, oh yeah, good for earnings. And they go and start buying garbage stocks, right? But if it's too weak, they can say, well, this is great. That means that Fed Chair Powell is going to be cutting rates even sooner. That's even more bullish for equities. So no matter what it is, they're going to try to spin it as bullish for equities. From a Fibonacci standpoint, look where you're at now, 18,330 up to 18.5. See if we find some key resistance in this area. Let's go to move forward. The Russell was challenging once again 2,100, and it got rejected from the exact same spot again, 2099. Russell's really struggling to break through here. If it does break through, we have the higher level targets of 2149 and 2215. Okay, those are your next two level targets, giving you this W pattern, which a lot of people would probably call a cup and handle. I call it a W pattern, and giving you these targets up here, okay? If the Russell does not break through, if it just keeps consolidating up in this range, when and if we find resistance on these elongated moves in the NASDAQ and S&P, then look for that move to occur here with the Russell eventually falling and capitulating and coming down. And I have 1813 as that target on the Russell before we base and come back up, pull back and come back out, break out towards that 2100, 2200 target and the next big blow off top, which I believe will be, in my opinion, the final top, that next big blow off top. But we're overheated and I want to see some pullbacks, restretch the rubber band. Let the rubber band come back so you can shoot it up to the next level. AMD, not quite at 216 still. It's flirting with it. But you got up to 213.83. Want to see AMD, whether it's beneath 216 or above it, 216 to 230. Want to see it print something, a pattern that is tradable, some type of pattern. So right now we just have a little baby candle hovering right around 212, 213 today. Let's move forward. Bitcoin, 8-hour chart. So we had our Bitcoin targets. Guys, remember my targets on Bitcoin are 73 to 80K. I told you I'm agnostic to the fact that I don't know if it's going to get to 73, then retrace, or if it's going to retrace and then pump back up to 73.80. But depending where it retraces to, we went over these targets in the previous videos, that's going to tell me how high level the target could be. When you look at this on the fib, we got up to the 1272, 68, 159. Obviously, we got wicks above it. 69,333 was the top there. And then all of these candles now are below it. None of them have closed above it outside of the first candle. So 1272, 68, 159. And again, even with this fib, right? This is a smaller range fib compared to the other fibs that I showed you. 72,953. That's my 1618 target. 72,953. Could we see more consolidation and then a breakout to that level? We shall see, guys. But remember, if Bitcoin starts topping out here and retracing, and I saw the comments, I know a lot of you guys, the crypto bros, disagree, are 49K and basically 43, 44K, 4683 will be the two targets that I'm looking for Bitcoin to pull back before it shoots back up to the upside for another all-time high potentially with the marketplaces. Okay, that's just what I'm thinking on the TA. I don't have anything tradable here yet on the 8-hour time frame. I'm not convinced this is a good range to trade yet. We're cooling off, resetting the oscillators. Momentum's cooling off, still bullish. Money flow, even though it's cooled off, still bullish. So again, we could just easily be doing a consolidation range just like this and then push up, hit my target 72,953. I like to take my trades at 1618 expansion zones. Okay, that's what I like to do. So I want to see if this comes up, hits my 73K target, and that may be the temporary top before the retracement, but we shall see. Time will tell. If this starts breaking down, you don't want to lose 64,391. Then obviously you don't want to lose this fractal at 59K. Okay, then you're getting a lot of volatility, and this could be the topping range for Bitcoin. Right now, the consolidation for me is still very tight, very neat, other than this one candle, and it's just hovering here. So this could easily be a projection zone up to $73,000. Let's move forward. Solana keeps ripping. Got past my 143 target. You're now at 148. Solana, my next key target is 158. If it keeps going up here on the projection, that would be a 200% retracement. Let's see what Solana does. And I'm not looking for Solana to necessarily top until we see an actual top in Bitcoin, an actual bearish momentum, bearish breakdown of Bitcoin. Then I'll be looking for the altcoins, which altcoins are lagging, which altcoins are forming bearish patterns that I could potentially trade. But I think we're getting near the tops of everything, guys. Bitcoin could have that little bit more upside to 73. And of course, the other indices, we just went over that. So let's jump over to Ethereum. Our upside target, since we pumped past the previous one, 4,013. You're at 38.55. Have not quite got there yet, guys. So we're not there yet. Is this the topping range, or will we come out and try to take this out? That remains to be seen. We got to see what happens here. We got to see what happens with Bitcoin. Everything's just consolidating and cooling off. The 1618 up here, if we can get past the 1272, which lines up with 4,000, 1618 would be 4209 as an upside target here for Ethereum. Let's move forward. Let's check out the DAX. Like I said, Lagarde was very what's it called, dovish as well. So the DAX got past my 1618, which was 17,821. It's at 17,888 right now. Next key level above it, 18,043. And then we'll see what the DAX does. Looking at the DAX, you got bearish divergence on this move. I mean, guys, the indices across the world globally pretty much look like this. Bearish divergence. When did it have the biggest run up? The most momentum, the highest reading on the money flow, back in Santa Claus rally. All of this is bearish divergence, but again, does not matter. Fewer people can pay higher prices and move assets. That's how these indices work. So let it do its thing, let it top out and see where it ends up. Watch that 1843. Let's just call it 1850. Watch 1850 and we'll see if it can get above that. Looking for a pattern to potentially trade here in the near future. Now looking at stocks 50, the 50 blue chips there in the Eurozone. Right almost at the 1618, 4,999. You're at 4,989, $10 away, and you got all the way up to 995. So this is a key zone. Why is this a key zone? We have this nice projection here tracking really beautifully the 1272 provided resistance. Watch 5K. People like round numbers. Remember, half of trading, probably more than half, is psychology. That's why at the S&P, you can look in these $50 blocks without even understanding fibs. You know that if it's 5,100, 5,150, next key resistance, 5,200. You hear this on TV. It's the same thing in these indices, guys. 5,000 is a nice round number. You have a euphoric rise up. You're approaching overbought. You have good momentum on the 3-day chart. What do we have on the daily? Daily, you're getting bearish divergence, of course, on this push up, bearish momentum divergence. So again, euphoric rise, where will it stop? Watch 4,999. Very specific number. Oh, wait, this is slightly up. Still the same number. So basically 5,000, watch 5,000. Let's see if it stalls out here, starts to give us some type of pattern. Let's go ahead and move forward. Looking at the NIC 225. So we got to our 40,000 target. We got just above it at 40,370, and then it dropped 900 plus points. Crazy how big this can move. It's retraced a lot of that. You're back at 39,670. Why did it drop? Again, the news catalyst, Bank of Japan, all the talking heads on TV are all on the same page again saying it looks like they may finally raise rates. Everybody else tightened already and is talking about cutting. Bank of Japan effectively has a zero rate, okay? They do yield curve control, which is why you have the parabolic 35+% rise and the NIC 225 finally taking out that 1989 all-time high. Now with fears they may raise rates, well, you got a little bit of a sell-off right, again, at a key psychological number, $40,000. You're just below the 1618 now. So I want to watch and see what this does, because if we get a pattern here, this may be an interesting trade. We'll find out soon what the Bank of Japan does. And obviously, if they don't raise, guys, with as euphoric as this has been, this could just be breaking back out to the upside. Let's look at the Paris market. So Paris market at the 1618 at 8,068. Right now we're at 80.35. So if we get to 80.68, looking for resistance there in the Paris market, we consolidate it right along that 7,900 line, pumped up with the guard. Let's check out our indicators again. Sure, it's the same. Of course, it's the same. Your largest most euphoric move here in the market was with the MFI and your momentum back around the time of the Santa Claus rally. Sell off, push up. You've just been leveling up here, staircase up. Watch 80.68 on the Paris market. Let's look at gold, because gold broke out new all-time high. I'm sure Peter Schiff was doing a happy dance on this. I want to look at some levels here on gold, guys. So when I look at this, let's look at this a couple different ways. Let's do a projection down here this way, a Wyckoff projection. We got just above the 1272 at 2154. We're holding that right now for support. That upside target in that case would be 2243. So you basically call that 2250, right? And if we want to look at this from a fib projection upwards, see what we get with this as well. I get 2140, which is right here where we hit and got above. And then the 200% retracement takes us up to that 2215 level. Let's find a larger gap here to take a projection off of and see what we get off of this. There you go. 2243, 2251, measuring this for proportional moves. So if we can stay above 2150, guys, 2250 is the target here based on Fibonacci. Could it fail before that? Of course. This is what I'm looking at with fibs, seeing if we can find resistance up there at 2200. This is really good since I own physical gold. I don't think this will just be forever pumping. When the markets sell off, what happens is all of these big investors that own gold, they sell their gold, they take profits when they can. But for now, you are moving again in confluence with the markets, which is really confusing to a lot of people on TV. But that's how the game works. You're moving up. Markets are moving up, maybe for different reasons, but that's how it's tracking right now. So watch. Hold this level above 2150 and then watch 2250 for a target. Silver is just not that interesting, but silver is not doing much. Own some silver, but it's just flat. You see this? So we don't have a lot here in silver. So I'm using the 5-day chart. So I want to pull out to this from this high of $30.28 and just look and see where we got resistance. We obviously hit the 786 up here at 27, but all these other previous moves here have all failed at the 618 or just wicked above at 25.37. Silver is at 24.57 right now. So if we come up to 25.37, guys, wouldn't be surprised if we find resistance and then start breaking back down into this pre-existing range of $22, as you can see, up to 25, 25.50. This is the range you have been in now essentially since December of 2022. Okay, this is just a long, slow consolidation period here in silver. Let's look at this on the money flow. You're bearish on the money flow. Momentum's flat. I don't see a catalyst yet changing this. At some point, silver will become more volatile and play catch up with gold, but it doesn't look like it's on the cards right now. Guys, hope you enjoyed this video. As always, I will answer your questions in the YouTube comments, and I hope everybody has a fantastic weekend. See you on the next transmission. Take care, everybody.